All right, good morning. Welcome here to Trader Minute. Great to have you aboard. My name is Jeff Yady, and I'll be with you here for our final class for Options Education Week as we roll up our sleeves and kick up another 100K challenge here this morning. We have not yet gotten into our first trade. There are a few on the board. It is options expiration today, so I'm never a huge fan of jumping into to stocks on the first day of expiration or on an expiration morning. But there are some things that are setting up here for this afternoon that we'll be able to go and take a look at. The other classes for the Options Education Week, for those of you newer to options or just kind of want to see what some of our methods are, all the videos are here and the recordings are in place. This is the last one right here. We will add a ninth one. Carl today will be talking about the vibe and the trend rider methods that we use, and that recording will also be placed into this format, into these videos. So let's get started here. Okay. Let's start out with what Trader Minute is. Okay. And more importantly, what Trader Minute is not. Okay, and I do this simply because of a lot of the various questions that we get, and I want to make sure that everybody is on the same page when it comes to the challenge. But what we are not here at Trader Minute, we're not a broker. Okay, we're not a broker. We're not a financial planner. We're not a financial planner or advisor. Okay, that's not who we are. We're not even fund managers. Uh, in a prior life, we were, and we did very well with it. But it was a very stressful existence. We're not fund managers. We're not experts. Okay, we're not experts on every stock or market topic. Okay. Do we have a lot of background? Do we have a lot of experience with things? Absolutely. Can we bring insights into the market from our years of trading experience? Absolutely. Am I a economics junkie and enjoy almost every economic topic that's out there? Yeah, I do. But at the same time, there are many of you out there that have some greater expertise on various topics than what we do. Okay. The other thing we're not predictors of direction on stocks. Okay. Uh, we have our basic systems that we'll talk about. We'll kind of look at various stocks. Always happy to look at various trades with you and different setups. But sometimes when we roll through different stocks and we talk about them, we don't quite know when earnings are or some of those other things. We know a lot, but we're not predictors on all stocks that are out there. And when we're comfortable with the topic, we try to express that. When we're not, we don't. Okay, so what are we? I mean, what is Trader Minute? Okay, what is Trader Minute? Okay, well, Trader Minute is basically a trade model. Okay, a trade model with simple systems. Okay, with simple systems and simple successes. Okay, and simple successes. We're not always successful. Heck, last challenge, those of you who are on board for that, you know that. We're not always successful. We don't claim to be. We have our losers, as any other trader does. We have our times where we just swing and we miss and we whiff. But we also have a model and a system that has done us very well over time and over the years. And it's one that we find to be very exciting. The whole concept of the challenge, the 3K to 100K challenge. It's something that we find very exciting. Some of you have been with us since the beginning. You know the excitement that it builds, and how fun it is when there's even just a little bit of success and growth, and just that first little push from 3,000 to 10,000, and how fun that can be. Okay. But please, if you're participating with us on the challenge, okay, please understand what it is. Um, Please do not put yourself at financial risk. Do not put yourself in a position where if for some reason the 3000 doesn't work this time, that you're in a major bind and it's affecting your family or your lifestyle. Please don't put yourself in that situation. Okay. While we expect every challenge to be good and we have high hopes for every challenge, we know the reality of the market and we know the reality of trading. It's not an art or it's not a science where everything you do is going to work. It's a matter of risk versus reward. Okay, it's a matter of risk versus reward. And with the challenge, basically what are we doing with risk is we're containing it. We're containing it to 3K. So we're basically saying, you know what? We could go on the worst trading streak of our life. We could have the worst things happen. We could be wronger than wrong. And no matter what, you know, our loss is 3K. That's what it is with the challenge. Okay. If we have a little success, if we replicate some of the past things that we've done, if we get a little lucky here and there, or we're able to spot some really good themes in the market that start to work, well, man, the upside, the way we do this, is tremendous. Okay, is tremendous. Every trade that we make, okay, for the challenge, every single trade that we make, we will send out how many contracts we are doing, what stock and what option we're doing, what the strike price is. We'll give you our fill price. Okay, we'll tell you what we got filled at. Not only will we tell you, we'll show you via this video screen. Those who are on live, you'll see us actually make the trade. Those who aren't, you'll always be able to go back into the archive and see that. Okay. Uh, we generally try to get into a trade when the option is calm. Okay. The last thing that I want is to get into an option that's trading at, let's say, $1.50, and by the time I make the trade and that 2 minutes for the email to go out for you to get the email or whatever, 2 minutes, 5 minutes, 20-minute period of time, the last thing I want to see is that option go from $1.50 to $1.70 or $1.80. Why? Because my email inbox is going to fill up. And I'm going to spend 3 days answering, hey, is this still a good trade at $1.70? Is it still a good trade at $1.80? So I have no incentive for that. In fact, I'd rather get in at $1.50, see it drop to $1.40, where others are able to get in around $1.40, and then see it go up. Okay, so we try to make these trades when the market is a little more calm, which means most of the trades we make are in the afternoon time period. Okay, it's in the afternoon time period. Yeah, option snipper. It's not necessarily looking for consolidation charts. It's just looking for a lull. In fact, we're looking more for breakout charts. And so we're just waiting for the lull. So something like Mead Johnson this morning, right? Mead Johnson's going to gap up. We talked about it this morning, but those options are going to move tremendously. And even if I just pull up a 1 minute chart on here, you see how it goes from 84 up to 86 and a half, drops to 85 and a half, up to 86 and a half. We're not going to jump into something like this on a morning. We'll let it play out. We'll let it play out, wait till the afternoon and get in. Now, some mornings are a little more calm. We're able to, jump in here and there. We don't kind of put a restriction on ourselves with that. But we're looking to get in on a period where basically in the ultra short term, things are pretty flat. Now, does that always work? No. And so every time we make a trade, we'll stay on video. And if you have a question about it, you're welcome to come back into the live chat room. We'll talk about it. We'll talk about where the current price is, what the risk reward model is for that, and how we would go forward with that. Okay. I'm not, we're interested in our own trading success, but we want you to have that success as well. And so it does us no good to say, well, we're in at 84, and 5 minutes later it's at 86, and it's just not repeatable. So it doesn't do us any good there. Okay. Alrighty, so that's kind of the general nature of the challenge. Okay, well, how do we structure it? What do we do as far as with the trades? Okay, well, we start with 3,000. Okay, we start with 3,000, and for most challenges, the first trade we put on $2,000 into that trade. So however many contracts we need, we'll put $2,000 on that trade. Okay. Today, and CJ and Jay Wood, you make great points here. You say, don't you think it's a little risky opening a trade on a Friday? Yeah, I mean, there are times where it's a little more risky. Today's options expiration. The last thing I want to do is open up a trade this morning. Okay. And while every part of me wants to get into a trade here today, I will only get in if we have a really nice setup. There are some things setting up, but it'll take some time for them to play out a little bit. Okay, but regardless, we will put 2,000 on that first trade. And generally, the first trade, we will deal with a Dow stock or a heavily traded S&P 500 stock, something that doesn't have a lot of gap risk. Okay, you won't see me go out and say, "Hey, let's go buy Mosaic calls." I won't do it. Why? Because there's significant gap risk within the ag group. Okay, so for as much as the Mosaic might have a bullish signal, it doesn't make any sense for the first trade. Okay, I'll stick with something like the last challenge. We did Disney to start. Okay, we started off with Disney and this little uptick right here. Would I buy Disney today? Probably not. But this is the type of stock that we will be looking for on the first trade. Okay. Now, with the challenge trades, okay, we assume we assume that 100% of the trade is at risk. Why do we have to make that assumption? Okay, well, it's because it is. We make that assumption because that is the way options are. If a stock gap's real big or it has some issues or some problems, uh, then there is 100% risk. But for the first trade, we generally try to stick to something where we have about 30% risk, meaning we have a stop level or a support level where we say, you know what, if this stock goes below this point, if we're in a call, hey, we'll be out. It'll be about a 30% risk. And if you didn't see our classes on pricing options, every trade that we do, whether it be Carl or myself, we'll show you where's the risk, where's the reward, where's kind of the stopping level there, okay, on that. Now, okay, now we do not use hard stops, meaning we're not going to go out and program a stop. I'm not going to say, well, let's go buy Disney calls and we're going to put a stop at the $1.80 on the call option. Okay, we very, very rarely will use hard stops. Okay, I'm not going to go fully into stops, but if you're interested in our take on stops in the video library, just go search stops, and there's a video that we did last week where we talked all about the different types of stops, the pros and the cons. Okay, occasionally we will put a stop. And the times we will do that is if we expect that the option value will move too quickly for us to be able to react to it. Okay. So in those cases, we will put some sort of stop on there. Those do get sent out via text, email. They're talked about on the video as well. Okay. But most of the trades, we will just kind of manage. We'll spot them at different levels. They get to our levels. We'll look to take those off. Okay. Now, when it comes to a trade, Okay, when it comes to a trade, what will happen is we'll go get into our first trade, and the first day, the second day, the third day, however long we're in it, you'll see constant chats come in from individuals saying, "Well, shouldn't we take it off here?" Or "I'm taking mine off here," or "I'm adding more here," and that's part of the open chat system, and part of what we like about Trader Minute. Okay, but if we're making a move, okay, if we are making a move, you will get a text, you will get an email, you will see a video, and it will be in the message center. Okay, it'll be in the message center. Okay. Occasionally, we're going to take some extra risk. Yeah, Darren, as you mentioned, we will leave a runner. We'll press the gas, we'll push it, maybe beyond what we probably should, but we will understand the risk that we have with that. We will have trades that start out profitable and then go negative. That will be part of the reality of it. We're not going to try to pick the top to every trade. Picking tops or bottoms in the long term is a very futile endeavor, and we understand we won't be able to do that. Okay. Yeah, a runner is basically take a look here at Tesoro. I just bring up Tesoro because I know a bunch of you are in the calls. Okay. Look, Tesoro is up. It's gone from 47 to 55 in a week and a half. Okay. Yeah, you should probably be pulling some off here. If you're holding it more, you're talking about a runner, something that's just flying in one direction and going forward there. Okay. Another thing, okay, another thing that we will not do, and for a very good reason, we will not make a trade based on the suggestion of any of our members. Okay, why do we do that? Is that because we don't think you know what you're talking about or anything? No, absolutely not. In fact, some of you have fantastic trade suggestions. Okay. But this is something I learned back in our fund managing days. Okay. And we were managing our investment fund, and one of our clients gave me a call. He said, "Jeff, I just got a tip on this. I know it's set up in the way you guys like it. It looks really good. They're talking about it over here. It's a really good setup." And so we went out and we made the trade. Okay. And we took full responsibility for the trade, but the trade didn't work. We ended up getting knocked out. And no matter how much I told him, no, we made that trade. That was on us. Yeah, you gave us information, but that was on us. He felt very bad about it. It was very, very personal for him. And the last thing that we want is for any of our members to feel personally responsible for any of the trades that we do or that are out there. Okay. There's a setup you love and you want to go after it, go for it. Absolutely go for it. But final decisions will come down to our group here at Trader Minute, and that's just because we bear the final responsibility there, and we don't want anyone to feel that at all. Okay. Now, most of our trades, are made within the context of the Vibe and the TrendRider systems that basically John and I used back in our fund managing days. Carl's going to talk about the Vibe and the TrendRider a little bit later today. For those of you new to it, that video will be recorded. You'll be able to review it. The Vibe and the TrendRider are simple technical systems. They're not perfect, but they give a good feel of directional shifts. With the challenge, though, we're not restricted to the Vibe and TrendRider. If we see some sort of news creating something, we'll go after it. If we have a good risk reward scenario, some sort of candle or some sort of other indicator, some sort of action that may not lie within the Vibe and TrendRider, but is strongly bullish or bearish that we can have a good risk reward scenario, we will go after that. So we're not restricting ourselves at all in the context of the challenge. So you'll see different trades with different approaches. Okay. Yeah, I see you guys chatting about trim and trail and those types of things. You'll find that with the challenge, we're a little more all or nothing. Occasionally, we'll cash out part of a trade, but most of the times, we run it. We hit our price target. We'll pull it off, and let's go find another trade. There's a staleness that comes in once we're in a trade for over 2 weeks, and so we have a real nice profit. We'll take it and go find something else. Okay. As far as the time periods for the charts that we use, okay, most of the triggers that we use are based off of daily charts, okay, but we will go in and look at the hourlies, okay. What will happen in our first trade is we'll get in the trade and you'll start seeing some chats come in from some of you more savvy traders that say, hey, 15-minute chart's breaking down, or the 5-minute chart looks good, or the 10-minute chart is doing this. Our decisions and our stop points and everything, they'll be mostly based on the dailies, occasionally the hourlies, and even occasionally the weeklies in a few situations. Okay, but rarely based off of minute charts and 15-minute charts and that type of a thing. Okay. Yes, Smitty, great question. Is there only buying of calls and puts? Yes, we will only do long calls and long puts. Okay. Now, a straddle, we're dealing with a long call, long put. Okay, so we could do that. We won't do straddles very often, but we will do long calls, long puts. No trade that we make will require any sort of margin. Okay, we will not do that. Look, the last thing that I want anybody to be at risk at is for blowing up their account. And even if we go do some sort of spread that requires us some margin, and let's just say we executed properly, but for some reason, one of our customers pushes the wrong button or something, it's just too much risk. We don't want to put anybody in that type of scenario. We don't have to. We don't have to have really, really good reward. Okay. So basically, the margin really just comes with the spreads. When we're dealing with long calls and long puts, you're never talking about anything that's marginable, okay, or that you have to deal with margin with. Okay. So those are some of the basics as far as the way we will uh, run some of the trades. The other thing, as the trade balance grows, okay, we will take money out, okay, when we hit 10,000, and it won't be exactly at 10,000. If we're still in a trade, it runs to 12,000, but somewhere over 10,000, we'll take 3 grand out. That way, we're only playing with profits. Then we start to hit 40 grand. Okay, again, not that exact number, but somewhere up there, we'll take 10 grand out. Okay, and we simply do that so that hey, if something weird happens or something crazy happens, there's still gains. You still have something in your pocket. You're still able to do very well, and it allows us to trade a little more free as the dollar amounts move higher. Okay. Yes, Scott. Do we implement any football games or horse races to help get to the 100K? I mean, we'll have the Super Bowl, right? I mean, we could. No, just kidding. No, obviously not. But no. Okay. Yeah, most trades that we make are generally we're using front month options, but something 15 to 45 days out. 15 to 45 days out, generally one strike in the money, occasionally a little out of the money, occasionally a little longer. Um, the option that we use typically doesn't matter. What matters is what's the risk and what's the reward. And, we can trade a weekly option that has a lot less risk than a January option, just depending on what option that is, what the strike, what the volatilities, and everything else are there. Okay. So that's kind of our general approach and how we will go with it. Okay. We use calls and puts. In fact, most challenges you probably see we use a few more puts than we do calls, simply because I'm tend to be a little more bearish than bullish. Stocks tend to fall faster than they go higher. The last 4 months have proven otherwise, but in general, that tends to be the case. I'm much more I'm much more apt to go after a put trigger than a call trigger. But at the same time, you'll see us play, both ways there. We will never sell puts. We will never sell calls, as those take some margin there. Okay. Okay. As those take a lot of margin and put on some risk that is not necessarily warranted. Okay. As you have questions, okay, as you have questions, we're on chat all day. Morning till afternoon, from market open till market close. When we're in a trade, so we'll get in a trade today. 90% chance that we get into a trade today, and Monday morning we'll talk about it. We'll talk about it Monday afternoon. We'll talk about it Monday anytime somebody brings it up, whether it's a winner or a loser. You find we will not hide from any trade just because it's going against us. We won't just kind of say, we're not going to talk about it. No, we'll bring it up. We'll talk about it. What are we looking for? What do we expect from it? What's happening with it? Okay. And so through this chat and video system, we will have constant updates. You will see updates on every trade in the morning and closing notes, okay, that are sent out every day. So to get information on what our thoughts are is very, very easy to do. Okay. Yeah, Dexter, is taking out cash 3,000 a psychological thing? Absolutely. Absolutely. Well, 90% psychological, 10% functional, right? Because one of the things we do not account for with the trades are commissions. And the reason we don't do that is every broker is different. Some of you out there are trading for free. Some of you are paying $50 a trade. Some of you are paying $5, some 10. Depending on who your broker is, what you're comfortable with. Okay. And so, there will be little discrepancies from fill prices and things like that. So when we get to 10,000, some of you are going to be sitting there at 9 grand. Some will be at 12. Some will be at various levels. And so by us pulling some out, it allows for those that want to be a little more on an equal with what our dollar amounts are to be on that equal level. Okay. Yeah, and Goldell, what if you don't get filled at the price we get filled? Okay. And we show you what our filled price is, and generally when we price out the option, okay, anything that's 5 or 10 cents more or less is in a good range. And when we get into the trade, you'll hear us talk about, hey, you know what? This stock, this option's going for 230. Anywhere in the 225 to 235, the risk reward ratio makes sense. You get out of that, then it doesn't as much, and so we'll talk about that. You don't get it at that price, and come on in, we talk about it, but there's no reason to haggle over pennies, in my opinion. And so a lot of times when we go out and actually push the button to make the trade, you'll actually see me fill it on a market order, just because I know I'll get it for 3 cents more expensive than what I can send. I send it out as 3 cents a little more expensive because that's my fill. And then those of you are able to come in, split the spread, or do something like that. Okay. Yeah, Ray, naked puts are a good strategy. Yeah, I mean, there are a ton of good strategies out there in the market, right? Credit spreads. If you're doing some credit spreads, I know some of you out there love credit spreads, but they're an income generating strategy, right? They are, hey, you have $100,000 account, you're going to sell some spreads, some vertical spreads, do these little credit spreads to lock in 2 to 3% a month. Okay, those are income generating strategies, and there's a time and a place, and there are great benefits to those. And anytime you want to talk about them, we're happy to. But for the challenge, we're not going to get anywhere doing that. So, where we will have most success is with long calls, long puts, and we'll go for that. So those are the general thoughts, general rules as far as how we run the challenge here. Um, we understand that there are There are some of you that are going to paper trade these. There are some of you that are going to live trade them. There are some of you who will put more than what we do. There are some of you who will put less than what we do. If you ask us what we suggest, we're not going to suggest anything. We're just going to show you what we do. Like I said, we're not brokers, financial advisors, financial planners. We don't know your financial situation, your risk tolerances, your background, your experience. Okay, so we're just going to show you what we're doing. And from that point, you're welcome to make the decision that you would like to make. I was asked a real good question last night, and it was from somebody who was looking over our past results, and they said, and they knew our last challenge. We had talked about our last challenge, and that didn't work, and they asked me. He said, "So, what have you learned from your losing challenges? What have you learned from your losing challenges?" And I didn't have to pause for very long to respond, and I said that I was glad I only had 3,000 at risk. Okay, because some of the losing challenges, yeah, we've made mistakes. Or I've done something stupid, or you know what, I missed something I shouldn't have missed. There are those cases, right? Every trader goes through some of those. It's very rare. But there are some challenges, like last challenge, where I go through the setups and I go, gee whiz, these were fantastic setups. If I compare these setups relative to setups in past challenges, they've been very profitable in past challenges. But for this challenge, it was a different market environment. Those setups didn't work. So what do I learn? What do I take from it? I'm glad glad I only have 3,000 at risk. Okay, that's what I want. Okay. Andrew, is there anything specific you can attribute to some of the early challengers that weren't as successful? Yeah, look, I don't know if it's me or everybody, every trader. Obviously I have a team here that helps me with each trade, and a team of really good traders. But trading can be streaky, and what works one time or works for a while may not work, a little bit later. I love to trade bearish engulfing candles. I look back at my trades, especially in my fund managing days. I look back at the most successful trades I've had. They're bearish engulfing candles. Okay, they're bearish engulfing candles. Well, you know what? Every bearish engulfing I've bought into, so far this year is gone up. Okay, market shifted. It's changed a little bit. And so, a lot of times when I look at the challenges that weren't as successful, it's simply because the market a little bit different, or I didn't adapt my strategy well enough for that present market there, or you know what, I just had a trade that blew up on me. Where we dealt with some sort of gap, or we dealt with some sort of we got in, we woke up the next day and stock had some news. It was up or down 5%. We were in calls, or vice versa. Bill, yeah, do we indicate stop levels? We do. Every trade we make, we look at it and say, you know what? At this point is when we say, yeah, this isn't working, or it's not. The probabilities are no longer in our favor, and so every trade we do indicate various stop levels there. Yeah, what happens if you bust the 3K and get to zero? We start over again. We start over again. The fastest we ever went from 3K to zero was a month and a half. That was the fastest. This last challenge, you could argue it was 4 months it took us to go to zero, but really it was about 3 months, 2.5 months, and then we were kind of in a scrambling mode. Okay. Yeah, Rob, 100K might be easier to achieve if the VIX wasn't around 12. Yeah, yeah. In some ways, you're right there. But one of the things, when the VIX goes to 20 or 30, option prices increase proportionally, right? So you can make 50% on a 1% move on a Dow stock now, where if the VIX were at 30, yeah, you'd pay more for your option, but you'd need a 3% move to make 50% or something like that. Okay. Every stock premiums are going to vary. The value of the calls and the puts are, and look, if we're looking at a stock and it's set up perfectly for us from a directional standpoint, but the options don't make any sense, we're not going to mess with the options. Okay, we're not going to mess with the options there. Okay? Smitty, you bring up a really good comment here. Smitty says option trading is pure gambling. It's pure gambling. And while I disagree with the full statement, I agree with it from an 80% standpoint. Why? Because I don't care what strategy, what method, fundamental, technical, dartboard, voodoo, whatever strategy you're using, you cannot account for every variable out there in the market. You absolutely cannot. Okay, from a stock trading standpoint and a long-term standpoint, you can be a lot more accurate. From a short-term standpoint, you can't control. You can't control if you went out on Exxon yesterday and bought puts and say, well, nothing's going to happen tomorrow, and you can't control the fact that today Warren Buffett comes out and says, hey, I bought a whole bunch of Exxon. There are going to be random variables out there in the market that have to be addressed. And because of that, I sleep very well at night knowing that 3K is my risk. Okay, because there is an element of random walk. When I first started trading the markets, read this article and it talked about three market philosophies. It said there's technical analysis, fundamental analysis, and random walk. And when I first started, I loved the charts. I loved the technicals. I used a couple fundamentals, but I loved the technicals, and I would trade with the technicals and whatnot. And the technicals have done me a lot of good over the years. But the longer I trade, the more I subscribe to the random walk theory, or in some cases, the gambling theory. Okay, that any trade, anything can happen, and we can't account for all the variables. So where do the technicals come in? They help us understand probabilities. They help us understand risk and reward. They help us put our trades in some sort of consistent format that we can go back, but it's not a guarantee that each and every trade will work. Okay? No, that will work. Okay? Yes, Snack. Have any of your 5 losses changed from a 4-month challenge to a 1, 2, 3-month challenge because of the loss? Yeah, like I said, our fastest loss was about 6 weeks, and that was in our managed funds, and we just up and started another one 2 weeks later. Okay. Yeah, Paul, Icon screwed you several times. Yeah, no, I mean, look, there's, you know, I'll never forget the day. I just won't forget the day. I'm sitting here. We're in Boeing calls here in July. We're riding high. Boeing calls are up almost 60% right here in July. And, the stock was trading higher that day. And, all of a sudden, within a couple minutes, the stock dropped $5 and continued to go down. I pull up the news, and there's pictures of one of the Boeing Dreamliner airplanes sitting there on fire and just burning, burning, and the stock just tanking. And, while it in the big picture here doesn't look like much of a move, from an option standpoint, you're talking about a significant depreciation of a call option there. Okay, so it's pretty there are a lot of those random type of variables, and they happen. They happen. Scott, you're going to trade 12K to get back 400K. All right. Yeah, in our November challenge, we went from our last November challenge, we went from 3,000 to 40,000 in 2 months. And one of you, oh, I don't know if you're out there right now, you called me up. You said, Jeff, this is really cool. I'm up nicely, and it's more money than I've made in the market. And you started talking to me. Well, why do 3,000 to 100,000? Why don't we just do 30,000 to a million? It's the same concept, right? And I just simply said to him, theoretically, yes, but if we started with 30,000 and you went to zero, how would you feel? And I said, we've gone to zero at that point 4 times. Uh, 30,000 for more people is more money. Um, it's more significant. Now, everybody out there, what is a significant dollar amount, differs across the board. I get bent out of shape when my daughter steals $5 out of my wallet. I have a father-in-law who's very well off, who walks around with, $1,000 in his wallet at a time, and it's not a big deal to him. So everybody has a little bit of a different, different view there. Alrighty, so those are some of the challenge rules, the ideas, the mentality behind this challenge. Please, it's a game. Don't take this and say, well, this is all you're trading. Every trade I'm going to make is hanging off what Jeff and Carl say. No, we're showing you what we're doing with the challenge, and you're welcome to join us. It's a fun journey. Even when it loses, it sucks, and it can drag a little bit as anything. But the good times are phenomenal. So here's looking forward to a fantastic challenge. If you have any questions, let us know. Carl will be back on video here with you in about an hour and 20 minutes to talk Vibe and Trend Rider. I will be spending the rest of the day kind of going through some of the trade setups that I've been looking at, looking for the entries, talking about some of the potential trades for the upcoming challenge. Hey, we appreciate you being with us. We wish you great trading success, and we will talk to you later. Take care.